Right, let's jump straight into this explainer and uncover what I genuinely think is a total hidden gem in the real estate world. While everyone else is out there fighting tooth and nail over houses, apartment complexes, or, massive commercial buildings, we're going to look at something completely different today. We're talking about vacant, rural land. And honestly, it might just be the exact secret advantage you've been searching for.
Here is our roadmap for today. We're covering the vacant land advantage, the high-velocity land flip, long-term holds, how to navigate the wild west of real estate, and finally, the land-limited difference.
So Section 1, the vacant land advantage. Let's get right into it.
Look, there is a massive contrast between traditional real estate and just raw dirt, right? Houses and apartments, they come with these insanely high barriers to entry, brutal competition, and the endless headaches of tenant management. You're constantly dealing with busted plumbing, expensive roof replacements, loud neighbors. But vacant rural land, it's brilliantly simple. Dirt doesn't have plumbing issues. It's never going to need a new roof. And the absolute best part, it literally never throws a loud party at 2 a.m.
But the true power here isn't just in the dirt itself, it's really in the financing. Let's talk about owner financing for a second. Traditional commercial lenders notoriously hate financing raw vacant land. Getting a mortgage for it is a nightmare. So that's where our owner financing steps in. It's basically when the seller acts as the bank. They let you, the buyer, pay the purchase price over time in installments rather than making you get a commercial loan. And this is the financial engine that drives both of the strategies we're about to cover.
Which brings us to Section 2, high velocity, the land flip. The land flip. This is all about scooping up undervalued parcels and selling them off rapidly to end users. But to actually flip effectively, you've got to acquire these assets at wholesale prices. There are 3 main ways to do this. Step 1, tax auctions, where opening bids are often just a tiny fraction of the actual market value. Step 2, direct mail campaigns. You're targeting motivated owners who are just sick and tired of paying property taxes. And Step 3, off-market acquisition, basically snagging these parcels way before they ever see the light of day on listing sites.
Let's look at a concrete scenario to really bring this to life for you. Imagine you use one of those acquisition strategies we just talked about, and your initial investment to purchase a piece of property is exactly $5,000. Just keep that number in the back of your mind.
Because here is where you see the incredible power of what we call markup and finance. You don't have to just sit around twiddling your thumbs waiting for a cash buyer. Just look at the math here. You bought the property for $5,000. You then list it for $15,000, but you offer owner financing to your new buyer. You ask for a super low down payment, say $500, which suddenly makes it accessible to a huge pool of buyers. From there, they pay you $299 a month for 60 months. So you recover a nice chunk of your initial investment right off the bat, and you create a reliable cash-flowing note for the next 5 years. You can just pocket that monthly cash flow, or, hey, you could even sell that note to another buyer for a lump sum. It's a total game changer.
All right, Section 3, long-term, the land hold.
Now, when you're land banking, you aren't looking for that quick exit. You're hunting for serious value appreciation over time. And to do this successfully, you have to identify growth markets. You want to look for 3 clear indicators here. First up, proximity to infrastructure. Think new power lines or newly upgraded county roads. Second is recreational demand. Is the property near a national forest or maybe a really popular lake or ski destination? And third is urban sprawl. If you can buy land on the absolute outskirts of a rapidly expanding city, time becomes your best friend.
Okay, I've got a massive pro tip for you on this hold strategy. If you acquired the property using owner financing debt from the original seller, you can actually use that debt to your advantage. Your goal is to keep your monthly payment to that original seller lower than the potential lease income you can generate from the land itself. So, for example, leasing it out for hunting or cattle grazing. If your lease income covers your debt payment, boom, the land literally pays for itself while it sits there and appreciates in value. Moving right along to Section 4, navigating the Wild West.
So the land industry definitely has a reputation for being a bit of a Wild West. It can be full of confusing titles and hidden issues. You constantly have to be asking yourself things like, am I buying landlocked dirt? Because if you aren't careful, you could very easily end up stuck with a property that you literally, legally cannot access.
To protect yourself from these Wild West scenarios, you absolutely cannot skip due diligence. Whether you're flipping or holding, this checklist right here is mandatory. First, zoning and usage. Does the county actually allow what you want to do, like residential, agricultural, recreational? Second, access. Does the property have legal access through a recorded road or easement? Third, utilities.
How far away is the nearest power line, and is a well even feasible? And finally, title clarity. Are there any liens, judgments, or heirship issues that could completely torpedo your ownership? Seriously, you have to verify every single one of these.
Which perfectly transitions us into Section 5, the LandLimited difference.
So what is the ultimate cheat code to avoiding all that risk? Partnering with experts who have already done the heavy lifting for you. Specifically, LandLimited.com. These guys have over 3 decades of experience focusing entirely on this one specific asset class, vacant rural land. They have built their whole business on doing the exact opposite of that Wild West mentality we just talked about.
LandLimited actually believes buying land should be as straightforward as buying a book online, which sounds crazy, but they deliver on it with unparalleled transparency. You get clear surveys so you know exactly where your property lines are. You get actual site visit reports, no stock photos here. They physically go out and visit the land to check the roads and the terrain. And incredibly, they offer a 3-day full refund guarantee. If the land doesn't perfectly fit your vision, you simply aren't stuck with it. This completely de-risks the whole acquisition process for you.
But remember, land investing is not some get-rich-quick scheme, okay? It's a real business built on patience, data, and consistent action. To map out your path to profit, you really want to follow these 3 steps. Number 1, educate yourself on the laws in your target counties. Number 2, start building your portfolio with smaller, lower-risk parcels so you can really understand the workflow. And number 3, be transparent. Treat your future buyers with the exact same honesty you'd expect from a seller. By mastering owner financing, you gain this incredible ability to control property without ever needing a bank's permission.
Well, we've covered the advantages of raw dirt, the power of owner financing, the velocity of the flip, the legacy of the hold, and obviously, the immense value of transparent partners. So I'm going to leave you with this final thought. Are you ready to bypass the brutal headaches of traditional real estate and actually start building your legacy with vetted, transparent assets? If you are, taking advantage of the unmatched security and inventory over at LandLimited.com might just be the absolute perfect place for you to start today.